Hello, everybody. My name is Nathan Jones. I'm a licensed financial professional for the broker group. Here is all of my information and my credentials here. My Florida license, my national producer number. I have the company's website. Feel free to go so you can take a picture. That's all my socials, my Calendly. These are all the insurance carriers that I am currently contracted with as well. All right. Now let's go ahead and get started. Give this a second to load here. All right, there we go. All right, let's get started. So, why life insurance is important in today's economy and in today's society, especially. And the reason why I believe it's more important is because, things aren't going to get cheaper anytime soon in terms of cost of living, health care. Taxes are going to go up within the next 5 to 10 years. There's, inflation is going crazy in a lot of places in the United States right now. So I'm gonna try to explain the value of why life insurance is important today, and how it can benefit you and protect your family as well. So what is life insurance? It's a contract between you and an insurance company. That's all it is. It's just like car insurance, health insurance, homeowners insurance. In exchange for payments from you, called premiums, the insurer promises you to cover you if God forbid something bad happens. In this case, when you die, it'll give your beneficiaries a lump sum of money called a death benefit, usually in the form of a check. But you can decide how you want it to be sent out. Your beneficiaries can decide how they want it to be sent out to you. So what's the purpose of life insurance? Well, it helps your loved ones cover expenses, so for living costs, rent, mortgage, bills, daily needs like food, gas, child care, debts, loans, credit cards, medical expenses, future expenses, college tuition, retirement income, or a spouse. And finally, final expenses, which just strictly covers funeral and burial costs. So there's two main types of life insurance. The main one that we're going to cover today is term life insurance. Okay? Highest death benefit for low cost and coverage for a specified number of years. Okay? The reason why I love term life insurance so much is I understand that most people, typically the middle class people, may or may not be able to afford permanent life insurance, but they can get a good amount of coverage at an affordable price with term life insurance. Okay, and I'll explain a little bit more of that in detail very very soon. And permanent life insurance gives you lifetime protection and tax deferred savings coverage until 100 plus years old, as long as premiums are paid and potential to accumulate cash value over time on a tax deferred basis. So, for those of you who don't know what tax deferred means, it means your money goes in pre taxed, your money grows pre taxed, but in another presentation, I'll explain why for a permanent life insurance in particular, because it doesn't operate like a 401k. In a 401k, your money goes in tax deferred and your money grows tax deferred. But when you take that money out, that's when the taxes are going to come out. So for example, for an IUL, it's the exact opposite. For an IUL, your tax goes in. I'm sorry, not your tax. Your money goes in tax deferred, and your money grows tax deferred. But in an IUL, it comes out tax free because life insurance is not an investment account. It's not directly invested into the stock market. Okay. So why should you choose term? Well, you can purchase large amounts of coverage inexpensively. That's literally exactly what it's supposed to be used for. Okay? It's much cheaper than permanent policies, and it covers time-limited needs. That's why this is called term life insurance. It's specifically designed to cover you for a specific amount of time, usually in the form of 10, 15, 20, 25, 30, 35 plus years. But as we move on to this presentation, I'm going to give you an option that could be very intriguing in terms of a flexibility standpoint. Okay, flexible lengths and amounts, convertible options, that's very important. You can use term life insurance as a segue into a conversation that can lead to permanent life insurance. And there are in some cases where certain insurance companies, you can convert your term policy into a permanent policy, and you may not have to go to the doctor. You may not have to get a blood exam, a urine analysis. You may not have to get any of that with certain insurance carriers. Okay? And it's easy to compare and shop. Typically, you want to work with multiple carriers or a licensed financial professional who is contracted with multiple carriers. It's just like grocery shopping. You want to see who has the best deal they could possibly give you. Okay? Now, there are some drawbacks. Term life does not have any cash value. The cost rises if renewed later. And the reason why it does that is because, remember, you're getting older. Okay? The higher the risk, the higher the cost. The lower the risk, the lower the cost. Okay? Makes sense? Just this light here. There we go. Sorry about that. And it could expire before you're done needing coverage. As I'll explain later, this is very important why you need to decide not just how much coverage you need, but how long do you need that coverage to last. That's very important to figure out, okay? And policy will terminate if premiums are paid. Now, there's some context to this. Because usually if you, let's say, for example, you miss a payment, right? You have what's called a grace period. So a grace period is typically 30 to 31 days, and you're given that time to make up that payment before it's time for you to make your next payment. And then if you don't pay it within that grace period time, then that's where your policy can lapse and terminate. Okay? So it's very important that you be aware of that. So who needs term insurance? Well, young families who need income replacement or what's called mortgage protection. Okay? Over 60% of people who actually have life insurance specifically do it for income replacement. Because when you pass away, your income goes with you as well in most cases. Okay, so if you're making $100,000 a year, and if you suddenly pass away, guess what? Now your family has to somehow make up that $100,000 a year. Okay, people on a high death benefit on a limited budget. That's very, very important. You want to get the right amount of coverage that you need, but you also want to get it at an affordable price and see if it can get within your budget. Okay? Those with temporary, clearly defined financial obligations, and anyone who prefers simple protection and plans to invest separately for wealth building. Okay? That's why I love term insurance, because it's simple and very easy to understand. And again, you can use a permanent life insurance policy to possibly invest separately for wealth building. But I'll save that for another webinar. Quick shopping tips. Choose the term that aligns with your biggest obligations. Very, very important. Your biggest obligation could be your mortgage. It could be your student loans. It could be your credit card debt. It could be your child's college tuition. Okay? Whatever your biggest financial obligation is, make sure your term is able to cover that. Okay? Next one, consider level versus annual renewable term. Level term basically means is that your premium is never going to change throughout the life of the policy. I would only recommend annual renewable term under very specific circumstances, because if you choose to do it this way, it's going to get more expensive over time because you're renewing it each and every year, and you get older each and every year. So I would only recommend this if somebody is on the older side and on the health declining side, where they don't qualify for life insurance. They don't qualify for permanent life insurance because, one, it's a little bit challenging for them to, one, afford it, but to qualify for it. So we use annual renewable term. This is somebody that's, they don't expect to live within the next 5 to 10 years. Okay, whether it's their body's falling apart, they're just not what they used to be. So I would only recommend annual renewable under very specific circumstances. and decide coverage amount typically 10 to 15 times your annual income. Now, for some people, that might sound like a lot, but I want you to think of it like this. Let's just say, hypothetically, you make $50,000 a year. $50,000 a year. Is that $50,000 going to be enough to pay for your mortgage, your credit card debt, your child's college tuition? No, it's not. But if we multiply it to, let's say, half a million or to $1 million, that makes it a little bit more easier to pay it off, doesn't it? Right? So that's the reason why we do that. Again, check for a convertible option. You know, there are certain carriers where if you get a permanent life insurance policy and you convert that term life insurance to permanent life insurance with that same specific carrier, you won't have to go through underwriting. You won't have to go to the doctor. You won't have to get anything up. The less I can use you to go to the doctor, the better. Okay. Next one, compare multiple insurers and get quotes for the exact same term. Very, very important. Some may offer the term for, let's say, 10 plus years for $25. Some may offer that exact same 10 years, but they do it for $20 or $15. Okay. So it's very, very, very important that you compare with multiple carriers to see what's within your budget and what's best for you. Okay. Next one, lock in low rates while you're young and healthy. Very, 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 very important. Life insurance is never going to be as cheap while you're young and you're healthy. Because if you keep waiting and waiting and waiting while you're getting older and your health starts to decline, that's when life insurance in general can become expensive. Okay? That is when life insurance becomes expensive. You know, people have this position that life insurance is expensive. If you're in your 60s and 70s, and if your health is declining, then yes, you are correct. It is expensive. But if you tackle this early on, it's much more affordable to you, and it's also much more easier for you to benefit from in the future. Okay. Let's go over some great term options. So we have the QOL Flex Term. This is by Corebridge Financial Solutions. It's a fantastic insurance company. They have no cost, quality of life accelerated benefit riders. So that's critical, terminal, and chronic illness riders, all at no cost. Okay. And what accelerated benefit means is that, let's just say, God forbid, you have, let's say, a stroke or heart attack, or you fall gravely ill, or you find out that you're not going to be living within the next year or two. It takes the money from your death benefit and it uses that to help pay for your healthcare expenses. Okay. So what happens is you go to the doctor sends the information to the insurance company, and then the insurance company uses the funds from your death benefit to help pay for your healthcare expenses. Okay. Next one, this one has 18 different term durations. This is incredibly rare for an insurance company to do this, to offer this many term durations. Okay. They offer 10, 15 to 30. So 15, 16, 17, 18, 19, 20, 21, and so on. It goes all the way up to 30 and 35 years. Okay. Fully convertible up to level premium or period or age 70. Meaning, if you decide to get a permanent life insurance policy with Corebridge, let's say if you want to convert it to an IUL, that is something that you can do. You either do it before your term policy ends or before age 70, whichever comes first. And then we have Ethos terms policies. Ethos is very unique because of its underwriting. It's 90 to 100% instant decision writing. It is very, very rare you will actually have to go to the doctor. Very, very rare. Okay? And it also offers estate planning, and it also includes several different riders at no extra cost as well. Okay? For those who don't know, estate planning can usually cost up to like $1,000. minimum. Ethos gives you all that information up front when you get there when you have a policy with them. They give you everything from wills and trust, power of attorney, healthcare directive. They give you all that stuff. Okay, they give you all the tools that you need to help make sure that you know how to play it and make sure that you're prepared for that. Okay. Strong foundation. This is from Forrester's Financial. Okay. This is a non-medical, meaning you don't have to go to the doctor. Okay. It is designed for diabetics or people with mild COPD. Okay. And they have what's called a diabetes calculator. Now, the one thing that I will say is that you have to be very, very honest with these insurance companies when it comes to something like this. Okay? You have to be very honest. You have to be very upfront. So let's just say you have a low A1C, but just say you have a high A1C. Okay? If the insurance company finds out that, hey, she actually does not actually have this within the first 2 years, they can void your policy and cancel it, and you will not get your money back. So it's very, very important that you're honest with these insurance companies, okay? And it's also for supplemental tobacco users. Now, some people have been wondering, what is supplemental tobacco? Non-cigarette. So you can chew tobacco, you can do marijuana, you can smoke a pipe, you can smoke cigars, okay? Because usually how insurance qualifies non or non-smoker, it's usually anything that's tobacco based. Okay, anything that's tobacco based. Estimate of coverage. So you need to prioritize. You need to know your age, your health, and we use what's called the DIME method, which is debt, income, mortgage, rent, and educational expenses. Now, for some people, they may not. For some people, they may not have kids, or they may not be in college or school anymore, so they may not have any educational expenses. Some people may put student loans in that category, but I'm more so put that under the debt category. Okay, and also number of dependents. Now, number of dependents does not necessarily mean children per se. Okay, maybe you're taking care of an older parent or a grandparent, or maybe you have a family member with you. You know, they fell on hard times, they needed a place to stay. You know, number of dependents do not necessarily mean or don't necessarily have to classify as children. Okay, let's go over some averages here. The average cost of raising a child to 18 years old to over $237,000, and this is under the assumption that they're healthy. What if they're a special needs child? It could be double, could be triple, maybe quadruple. Okay. Average cost per college student per year in the United States, over $38,000 a year. Average remaining mortgage balance, over $250,000. The average American mortgage loan is almost $330,000, ladies and gentlemen. Now think about this. Do you think these costs are going to go down anytime soon? Because I don't. Not in this economy. Absolutely not. Now let's go over average cost of insurance. The average cost of car insurance, full coverage, over $2,600 a year. Just the bare minimum coverage is $820 a year. The average cost of health insurance, a bronze plan, almost $500 a month. A gold plan, just over $500 a month. A platinum plan, over $900 a month. A family health plan, over 25 and a half grand a year. Okay? Average cost of homeowners insurance, $1,400 to over $2,100 a year. While the average cost of term life insurance is $26 a month or $305 a year. Now you would think because you're insuring your life, that would be the most expensive, right? Because at the end of the day, if you're dead, your homeowners insurance doesn't matter, your health insurance doesn't matter, and your car insurance doesn't matter. But isn't it funny how insuring your life is actually the most affordable? Isn't that funny? Now let's go over some alarming statistics. 60% of Americans bought life insurance for income replacement. 57% of Americans are living paycheck to paycheck, and that's regardless of tax bracket. That's regardless of wage, salary. It doesn't matter. Okay? It does not matter. 47% of baby boomers say they will need to work until age 65 to 69 before they can retire. They want you to work until you die. That is how this economy is set up right now. You are basically being told you have to work until you die. Okay? 88% of millennials are concerned about availability for Social Security when they retire, and I am one of those millennials as well. Because Social Security is eventually going to decrease significantly within the next 10 years. And if you look at some studies, it's going to be even earlier than that. Because you have to remember, people are living longer now. People are living until like their 80s and 90s. And because of that, the longer people are staying alive, the more people they have to pay. But if they're not able to keep up with how old people are getting, the money is going to run out faster. Okay? 40% of Americans wouldn't be able to cover a surprise $1,000 expense using cash or savings. Now that is sad. That is incredibly sad. And anybody that's a homeowner, you're going to have some surprise expenses. You just got your car fixed. Now you got to get the dishwasher fixed. You just fix the dishwasher. Now you got to get a new washer and dryer. You get the new washer and dryer. Now you got to fix the window. You fix the window. Now you got to fix the door. You fix the door. Now you got to get a new floor. Like it's homeownership is not for the weak. Okay. Next one. 42% of Americans have no emergency fund at all. At all. It's hard out here for a lot of people in today's economy, man. It's a lot. Let's go over the myths about life insurance. My family can rely on loans or other family members. Now, I will say this. You should be able to go to your family for support, right? You should be able to go to your family to support and help you. However, it is unfair to your family to try to replace your income under the circumstances that they're grieving. They're highly emotional. When emotions run high, logic runs low. When you are highly emotional, we do not make the greatest decisions. Okay? Perfect example. People who win the lottery. Okay? You're highly ecstatic, you're happy, you're overjoyed. But how many people who win the lottery go broke within a couple of years? Happens all the time, right? Because they're overly emotional. Okay? When you're under those specific amount of circumstances, you're not going to make the best decisions financially and emotionally. Okay? Money is tight. I just can't afford to have to buy life insurance. With all due respect, I understand why people might think that, but that's actually making the argument for you without even realizing it. Because guess what? Your bills, your rent or your mortgage, your car payments, your child care, your food, your gas, as your family becomes bigger, so does your monthly expenses and your bills. As your family gets bigger, so does everything else. Your house gets bigger, depending on if you move into a bigger house. Your bills get bigger. You got to buy more food. You may have to get a second car. You got to pay for more child care. Okay? Now, what happens if God forbid something happens to you, and now your family has to figure out how to replace or cover all of these things without your source of income? Just think about that for a second, okay? life insurance would be a free ride for my kids. That's not the way how to look at it, ladies and gentlemen. Okay? You know, some people may have grew up in an age where your parents taught you work ethic, hard work, education. And some people probably took those same values that they took from their parents and they try to pass them on to their kids as well, right? What this essentially teaches your children is it teaches them to practice and and preach and teach them personal financial responsibility. Okay? Now, wouldn't that be a great thing to pass on from your children to their children as well? Wouldn't that be an awesome thing to pass on generation after generation? And there's just some questions to ask about yourself. What are your financial goals? Do you want to retire? Do you want to protect your family? Do you need to replace your income? Do you want to be able to take care of your healthcare expenses? Do you want to leave a legacy for your family? What type is the best for me? Somebody may be interested in permanent life insurance. Maybe they don't want to do term. Maybe they see better value in getting permanent life insurance. How much coverage do I need? Are there any exclusions or limitations? That's also very important. Insurance companies have what's called knockout conditions. Certain insurance companies do not just look at your health. Okay? They look at your financial records. Have you ever declared bankruptcy within the last 5 years? Or to look at your legal history. Have you had a DUI within the past 5 years? Okay? Can I convert my policy if things change? That is very, very important. As life happens and as life changes, so do your insurance needs as well. So, thank you guys so much for watching. I really appreciate you all. I'm going to, once again, let me go to this here. Let me go to my website page one more time, so you guys can see all my information once more. Once again, thank you all so much for watching. I really appreciate you. Let's give this just a second. All right, once again, my name is Nathan Jones. Here are all my credentials. That's my Florida license number, national producer number. That's all my links. That's all my socials. And these are all the insurance companies that I am contracted with. All right. Once again, thank you guys so much for watching. I really appreciate you. I hope everyone has a wonderful weekend, and I hope you enjoy the holiday. Take care.